Hello, everybody, and welcome to another episode of Multifamily Chronicles. I'm your host, Adrian Danila. Today, we have a very special guest with us here. Today, we have with us Devin Wirt. Devin, welcome to the show.
Adrian, appreciate you having me here and excited to be on the show.
Devin is the co founder and managing director at Connects Us. Devin, I want to start by asking you to take us through your journey, through your entrepreneurial journey, and how did you the inception of Connects Us and where Connects Us is today. Take us through that journey.
Yeah, so I'll step back a little bit. Graduated college in 2007, started my first company in '08. My background is grew up in a very blue collar family. We didn't have access to a lot of the money that I played people with sports with or the experiences of those that were around me. So once I started that first company, I wanted accessibility to initially for that, which is called Transformation Fitness, for health and wellness to people of all economic status, any type of age range, etc. That is portrayed with me throughout the rest of my life. And anything now that I personally invest in, I personally advise or end up diving into with my time, it's got to be accessible to the masses to make sure that it's meeting the core mandate of where I'm sitting today. So through that journey, I started Connexus. I'm one of the co-founders and managing director of Connexus. Is sector agnostic. It's applicable to all asset classes and really solving a few core issues, which I'm sure we'll dive into during the podcast.
Would you like to elaborate a little bit more on the pain points that Connects Us is solving for the multifamily industry?
Yeah, so I'll dive into the overarching thesis of Connexus, what is solving not just for multifamily but for real estate in general. So Connexus is a centralized RFP platform that is actually taking time back from the managers, allowing them more time in their day, and helping both owners and operators save money for their assets. This is not just multifamily; it's HOA, it's hotel, it's commercial, it's retail, etc. So what we end up doing is that our platform will take in all of the different contracts. We're going to digitize the scope of works. We're going to analyze your spend in the region compared to other operators. And then we're going to go out and bid out your regional, local, or national portfolio and make sure you're getting the best aggregate prices rather than each manager bidding out that process at scale. On top of that, outside of the digitizing the scope, the contract management, we're also managing the renewal process. We're taking a look at the data in each section, and we're helping other owners with that data underwrite new projects to make sure that the investor return rate, the IRR, is projected correctly on their new purchases.
Devin, I want to go back to your entrepreneurial journey. You shared that you started very basic, right? You didn't have a lot of resources when you started out first, right? So this is amazing. The upward mobility that our society offers here in the United States is unparalleled, really. So I do wanted to ask you to share with us a few of the best lessons that you learned throughout your journey as an entrepreneur.
I can't stress this enough. Things that I still live and I talk about to other people that we advise as a company and even just the resources. It's people first. No matter what technology we're building, no matter what we're doing, we got to invest in our people. My core thesis is people, product, and then people, process, and then product. And without the people, we actually cannot move forward. So I would say when I first started the company, my last company was a company called TF Living. It's now called Circuit, which is still active today. One of my mentors was a guy named Brady Nolan. And Brady was like, Devin, you're going to need very high level executives in order to scale this company. And we were fortunate enough to scale over 250,000 units throughout my 4 years there, and then over 60 full-time people, over 1,100 people on the street. But I underestimated how important it was to have a true executive team around you as you're building something special. So I would say the core lesson I will always take a look at is people. And then second, as far as startups, I think that most people don't look at DSO. Like how are we taking a look at our days on the street from our receivables? How are we factoring that into our fundraising in case we are venture backed or family office backed, et cetera? It's truly tracking receivables to make sure that we have cash on hand to make sure that we have the decisions that we're making on a day-to-day basis.
I want to go to relationships, right? And to selling a little bit. One of the most common pieces of advice that I'm hearing for someone that starts a new business is that don't try to sell a product, don't try to sell a service, right? Just try to build a relationship. And I couldn't agree more with that. But let's just say that this is a situation, someone brand new in an industry, and let's just say it's multifamily. They don't have many connections. They're starting out just right now. They don't have a lot of capital, right? And the advice is go ahead and build connections and your business will come in. But while you're building connections, if in that period of time you don't have anything to support you to sustain your living, how do you survive as a new entrepreneur? I think that's the piece that in my mind it's missing. I love to get your take on this, maybe some piece of advice here.
I think there's two parts of that. There's how are you surviving as an early stage entrepreneur if you don't have the backing? And second, how are you taking a look at your connections and being consultative in your selling approach and making sure you're developing true, genuine relationships? So I want to just kind of split those apart. My personal opinion is that as an early stage entrepreneur, if you don't have either family money or if you don't have massive VC backing, you're going to have to make some sacrifices. You're going to have to take a look at your lifestyles, maybe the subscriptions, the Netflix or the Hulus of the world, and start cutting back on where that is in order to make sure that your vision and your dream is being adhered to. When we talk about that, is the sacrifice is real, right? You may not be able to go on vacation. You may have to take a look at some of the extras in your life, but entrepreneurship is about the dream. It's not about the money at the end of the day. The money's the byproduct. Is what is your vision? What is your mission? And what are you trying to achieve? And you're going to have to end up making some sacrifices in order to make that happen. Second is being genuine in your approach. Adrian, you and I recently finally connected. But we've known each other for a long time. We finally got to connect. And it's being genuine approach, it's being a true human. It's not just saying, I want to touch base with you in order to sell something. It's, I want to learn about you. What are your needs? What are your pain points? I've had many people in this industry that have never bought a thing off of me. But at the end of the day, I know about their families. I wanted to develop true relationships with them. They have given feedback on different products that I've brought to them. And that's the most important part of this is surround yourself with the correct people. Don't try to be the snake oil salesman as you're out trying to sell, and make sure you're being genuine with your relationships.
The next, I want to touch on a breakthrough. When was your first major breakthrough as a business, as an entrepreneur, as a business owner? How long did it take? And walk me through how you felt until you got to that point, to the first breakthrough, major breakthrough.
Yeah, I appreciate it. I think that we can talk about the breakthrough. I think during this process, we should also talk about the failures. I think every founder wants to talk about how they were successful, but most people don't talk about where the failures were as well. I was fortunate enough, started a company I was a personal trainer. My background is not in business. I don't have an MBA, but I was able to scale initially just a personal training company to do fairly well. Was able to break over $1 million in revenue by 2011 at the age of 25 and scaled that from Philadelphia down to Orlando, Florida in 14, where I ended up selling that company. But my first major breakthrough was actually having a true run rate that was over $1 million at that point in time. That was my first major breakthrough. To break that $1 million mark on the run rate is always very important to the initial entrepreneur.
You mentioned scaling, right? So could you share some lessons that you learned from scaling a business with us? I think that's super important. I think this is one of the pain points that most businesses have, right? When they're growing, how do you scale? Like, how do you start small and then you get like medium size, large size, maybe?
Yeah. So I would say we need to understand who we are initially. And as early stage founders or first time founders, you need to where it is. There's an individual that I'll never be able to repay in my life. His name is Richard Aller. He is the now the founder, one of the co-founders and managing partner of Gold Dollar Real Estate Investments. Richard took a call from me. I was 22 years old. He was in Philadelphia before he even started Gold Dollar Real Estate Investments. And he gave me my first try. I will say learning from others is the biggest advice I got from scaling companies, learning from their successes, learning from their mistakes, and not just trying to replicate it, but putting it into your own business plan in order to make sure. Richard, back from 2009, was instrumental for me learning real estate, understanding how people operate. And it's something that I'll never be able to repay to this day. But I would also say surrounding yourself with a network of people that will constantly teach you and guide you throughout your journey.
You mentioned Richard and his influence on you as a business owner. Besides him, would it be like which one other person is that you would name that made the biggest influence, that had the biggest positive influence in your life and your career besides him?
I wouldn't say there's one. I would say there's a few. I had a college professor, real quick. I almost got out of college my freshman year, and I had a college professor pull me aside, tell me that I was ruining my life and I needed to get things on straight. And I had so much more to do. Professor Bob Altman, he recommended me for my college Hall of Fame, which I was fortunate to be inducted in 2021, which was very nice. I would say second is a guy named Mark Beata, Beata Nurses, multi-billion-dollar company in the home healthcare space. He taught me one lesson. He said, Devin, I'm the first person in the office. I'm the last person to leave every day, regardless of my status or the size of the company. I try to live true to that every day. And then the third person is a person named Regina Kelban, who taught me that I'm going to get knocked down. It's how I get back up and keep putting one foot in front of the other. That's who I'm going to be in life and how I'm going to succeed. And they were some of the biggest pieces of advice that I received during my early stage entrepreneur that I've taken to this day. And I constantly learn from people like yourself, Adrian, how we talk about the real estate sector and others, and surround myself with people like that.
Rejection is the big deal when you're an entrepreneur. You're facing it, it hits your face like many times a day, left, right, and front. How how do you deal with the rejection in business? And what are some lessons that you learned from dealing with rejection? And how important was that for
Well,
you
let's
to
talk about rejection today. Let's talk about the current capital markets and what's currently going on and what early stage companies are doing, what companies are doing in general, right? We're taking a look at prime rate right now. Still to this day, it's been this way for months at 8.5%. What does that mean? You're selling into a real estate sector, and we're not understanding what's going on in the global economy, but especially the US economy, right? Prime rates are high. Most people will end up having floating debt. What's that mean for real estate owners? Cash flow is low. That means they don't have the money to spend on capital expenditures, from whether it's going to be a lock for smart access control or whether it's going to be operational expenses from the resident experience app. Is that we need to be quantitative in our selling approach to make sure that we're actually showing a true ROI. And most importantly, with the stress and the reduction of headcount for a lot of owners and operators in today's world, we need to show a return on time for the on-site and corporate team members as we're selling through, to make sure that we're actually showing true value. So I would say there are two of the biggest components as we're going out to market is understanding the landscape and understanding how to be quantitative in your sales approach.
you mentioned showing them how you're able, or how a business would be able to put time back into their team's day. I'm curious if you have any particular tips of how to do that, if you have any processes and any specific KPIs. And I'm going to tell you the reason why I'm asking this, because I heard many, I was on the other side of, a sales pitch. I was the potential customer, and I've been hearing this, right, a lot. Our processes or our systems or our products are going to be able to put time back into your team's day. But it was a very rare occurrence where I would see like KPIs, like some data, some numbers to back up those statements. And I know the reasons why, but I want to just get your take on that. How's your approach, or what are some things that you suggest in order for that approach to be successful for business partner, for vendor?
Yeah. So as a vendor, most of us don't come from the real estate world. We may hire people from that. My approach is sales 101 is ask a question. And just with all respect to everybody out there, then to shut up and listen, right? I don't mean just hear the person, but to listen to what's going on. Adrian, like companies get started and they have a great idea, but they don't understand the perspective from somebody like your side. Is reach out to an Adrian Dinella, reach out to a Heather Moore or Noel Charbal, who's the MD of Greystar in the DC, Maryland, Virginia area, and then ask them what's going on. Understand what is happening at the property manager level, at the regional level, how much time they're spending on doing this. Rather than making false claims on the time spent or the statements that you're going to do, a true case study, understand the time that's being spent, and then be able to dive in from there to be able to then have a quantitative approach to your sales rather than just guessing, right? What I don't like when early stage startups or even SMB companies do is that they go in blindfolded and they're throwing that dart blindfolded. Is ask for advice, ask for help. What I've learned about real estate is that it's a very incestuous industry, but with that incestuous industry, we're all willing to help each other. Reach out to your peers, ask for help, ask for introductions, not to sell, but to learn. And I think that's what we need to do more.
When you're customer facing, when you have a pitch, you have 30 minutes or an hour of their time. What would be the ideal percentage of the time that you will be speaking versus the time that you will be listening to what they have to say?
I would say at most 50-50. I think what we need to do is explain what the company is. And then I think what most companies end up doing is that they have a script and they're going through a deck. Rather than going through a deck and being extremely buttoned up in that process, is that we need to understand what is the pain point on why we're on this call. If we don't ask the broad question of saying, Adrian, as a director of maintenance, what are your pain points and what are you trying to solve right now? Why are you on this call? We're never going to know where to guide that pitch. So I think that we need to understand the pain points and talk 50-50. But like I said, we don't need to just truly hear somebody. We need to listen to what they're saying, and they will help guide your pitch to where it needs to go from there. What are they liking? What are they not liking? And what are we solving?
Due to the current market conditions, there's tremendous pressures for vendors to sell products and services that they're selling. A few weeks back, I had an executive of a company, fairly large company, that was on one of my podcasts, and he stated that every single day he gets like 10 to 15 different emails asking him for time to show a service, to show a product, trying to sell something. So if you're on the other side with this in mind, that an executive like is being pitched 10, 15, 20, 30 times a day, what can a vendor do to stand out of the crowd and just be that competition, besides having that direct relationship built, which helps you cut in line? But what are other things that are really helpful for you to get in front of the decision maker when
Yes,
there's
Adrian, like that's a broad question, and I don't know if we have the time today to go through everything. We'll start with what is your sequencing approach in your outreach? Is that I've watched companies try to do this manually, and it doesn't work. Is you need to start A/B testing. What are the subject headers that make sense? What are your call to actions within the actual email itself that are driving people to book? And you should be data driven on those results. So that's first and foremost on where it is. Second is that when you take a look at the body of your subject, is that something in there should actually speak out. For example, are you saving, like at Connexus, I will say, like we were working with two different operators. Right now, we're telling people we're saving 7%. I will tell you, we just did two different RFPs on a regional and a portfolio basis that on average saved 18%. We're going to use that case study as a company in almost every email. And we're going to break that down per service item on where that 18% were saved, right? These are real numbers that actually truly drive a return on investment from where it sits. 18% is a lot of money, right? You're spending $1 million on something, and you're saving $180,000 a year. That's a lot of cash.
That's a tremendous saving, and it's almost unheard of. If you could provide a service that saves that much, I see that as a no-brainer, as long as you're making the case and you're backing it up with data. And seems like you're already doing that. That's very exciting to see for me. Even though I'm on a vendor side right now, I wish when I was an operator that vendors will come up and present their products and services this way to me, other than just ask me to believe in what they were saying, like preaching that they're saving without anything to back it up.
Even say what they're reaching out. Like, Adrian, how many LinkedIn messages do you get today that are generic? You can tell are copy and paste it, and they're reaching out to you. I'm going to guess I get at least 20 to 30 a day that I never respond back to. And I would say, could we make it more genuine? Can I say, Adrian, I saw your podcast. You were hosting, I believe you're doing something with Jennifer Stakokis coming up, who is a dear friend. I saw your podcast with Jennifer. Can I just, from your experience, I looked at your LinkedIn profile. Can I just ask you a few questions? What would make you answer an email? That's a way to actually drive it. What would make Adrian answer that email? Asking for that feedback. What would be the subject header? It probably takes no more than 15 minutes. And asking for pure feedback, I think that is something that people need to do more often, rather than thinking that they know exactly what it is.
This always works with me. If someone approaches me and says, "Hey, I like to get your take. Could you help me? Like, or could you take 5 minutes of your time to answer a few questions that I have?" And of course, when they have to give me something, not like, "Okay, you'll find out about questions later." Give me the questions, and I'm gonna tell you. A lot of times, it's not even stuff that's I'm qualified to answer. I get messages from people that are completely randomly reaching out that have nothing to do with my expertise, right? They're not
Right.
even taking the time to look at my profile. It literally takes 2 minutes to scroll up and down, see my background, and see, would this apply to me? Would I be? They don't take the time to qualify me as a potential client, and that's kind of, and I do answer to those. I say, looks like you didn't even take the time to look at my profile to understand that, like, I'm not an ideal customer. I'm not even a customer for the services. And most of them are going silent after that. A few of them are trying to come back. I've seen a couple of like very funny comebacks. So I had to give them that. But for the most part, that's what I'm seeing is like they're not taking a moment to qualify the potential client. And this is a sure way to burn a lead, a future lead. And it doesn't even have to be in terms of like having a lead. Like it could be someone, like you said, you never done business with certain people, but maybe they refer you to 20 other people because
Mhm.
there was a relationship out there. It doesn't always have to be transactional. It doesn't always have to be about this for that. Quid pro quo. It could just be like people trying to understand other people and trying to help people. Do you disagree here?
I absolutely don't disagree. I would say one of my biggest pet peeves when people reach out to me on LinkedIn, spell my name right. If you spell my name wrong, I have been called Dirt. I have been called Dervin. I have been called so many different names and just spelling my first name wrong in general. I know that you're copy and pasting. I know that it's not genuine. It's just like don't always trying to be transactional. I get we all have stress from investors or our board or whatever it may be to drive revenue, hit our Q1 numbers, whatever. Like we can go down a path of like where that stress comes from. But at the end of the day, I don't know about you, Adrian. I don't want to be sold some false bill of goods. Don't lie when you're selling to me either. Come to me with the truth. Where's the product at? Where's this going to be at? Future sell me. I get it. But be genuine in the approach and be honest and just ask for advice if it's not a fit. It's okay if it's not a fit. Not everybody's going to buy your product.
100. Devin, I want to go back to the current capital constraints that all businesses are facing, whether they're on a property management side, whether they're vendors. What role does insurance play in mitigating financial risks for businesses, especially during uncertain economical times like this? And also, there's an election year. We can't really discount that.
No, we look, we can't discount the election year. Look, I don't want to get into a political component here, right? No matter which side you side on, every prediction says that rates are not going to lower until Q4 this year, right? And that's for interest rates. Insurance rates, as we've all seen, especially around the Sun Belt. We take a look at Florida. I personally sit in South Carolina off the beach, and I will say I personally have single family rentals that I own and lease out. I've watched some of our HOAs can't find a carrier that will even carry insurance for the HO6 policy. And insurance rates have skyrocketed. We've watched assessments go throughout SFR, single family rentals. We've watched institutional multifamily owners where their insurance rates have not doubled, but sometimes tripled. It's playing into the cash flow that people have in order to actually buy other products. Like I said, whether it's access control, whether it's going to be resident experience, is that cash flow is down, insurance rates are up, interest rates are up. I think the one thing that people forget to talk about is inflation and labor rates. Labor rates are up. And we need to actually dive into that because it's not just the doorstep trash vendors that are having to pay the people walking around picking up the trash $20. It may go up to $25, right? But the cash flow on the operator side and the owner side may not correlate with the bump in pricing that needs to happen to create a profitable company, EBITDA positive.
Are there any emerging trends or strategies for businesses for them to employ or deploy to overcome these financial challenges that we see in the market?
Look, we're in the mix, right? Prop tech's been around, I would say, for at least 10 years. I was fortunate enough to be backed by a company called Kimber Creek. I think that I'm going to use the word not to date myself, but they're one of the original venture capitalists in the real estate sector, especially in apartments. And when we take a look at Camber Creek, it's just that what we've learned throughout the VC era and the prop tech era is that technology will play a large role in that. As companies, I wouldn't say it's a trend. How are we using AI? How are we using software tools in order to automate things rather than using people just to do this at scale? Like we want to provide jobs, we need to understand what are the efficiencies. One of the things right now in multifamily is how are we taking a look at the maintenance staffs, centralization of leasing? How is that playing into self-guided touring? Is that we need to do the same thing as vendors. How are we centralizing our systems? How are they integrating with each other? How are they creating it for us as a company in order to decrease our headcount and increase our profitability?
You mentioned centralization. This really caught my attention, right? Because I'm passionate about the topic. So, to you, from outside looking in, is it centralization something that's a real thing? Is it just a buzzword, or it's a situation somewhere in between the two?
It's somewhere in between the two. I think when we take a look at centralization, let's use a Greystar. Greystar has density in each of their markets. and they've been strategic on how they enter it, right? So centralization of a leasing and a maintenance staff would make sense. That's how you're taking a look at that. If you have 100 units in the market here, 100 units in the market there, centralization doesn't really make sense. How are you going to centralize it? What are you doing? I think you need to understand your margins. I think it depends on the owner or operator with where it is. But I think that if you can centralize the way that you're creating your operations, whether it's from contract management, whether it's from deploying property-wide Wi-Fi and putting some sort of SGT, this way you don't have a leasing and marketing agent on site all the time. I think it would actually make sense there, but you need to understand your portfolio, what you want to do, the long-term cost, et cetera. And then also making sure that whatever processes you put in place are scalable, not just for now, but 5 years from now.
Before we attack in the next section, I wanted to ask you, do you have a hard time at the top of the hour? A hard stop? Because I want to be respectful of your time, just so I could know how to approach the remaining questions.
No, I'm good to go. I have a hard stop at 1:30 Eastern, but that's
Okay.
about it.
We have some time, we have some room. Again, I just don't want to go over without asking.
Yeah.
Devin, I want to go to another topic, and this is quantitative selling, right? I want to start by the definition. What is it, and how does it differ from traditional sales approaches? Could you share?
Yeah. So let me use an example. Adrian, I am the CEO of ABC Janitorial Company. We are best in class at what we do. What does that mean? What does
Really
best
nothing.
mean?
Really nothing, because everybody says that, right? Or most companies are saying that they're priding themselves to be best in class. So
Right.
there's no specifics there.
So if I said to you, Adrian, I own ABC Janitorial Company, we've had 99% of our people show up on time and also retention of our staff. Our employees get to know your residents, will say hi to you every day. And we have done CSAT scores in the back end that show that resident satisfaction is at 4 out of 5 stars. That's a whole different approach to the way that we're doing this, right? Is that are people showing up? It may not just be about price. Why we're in a bad market because of cash flow, this is also about resident retention and resident experience, because that lease of a resident turning, right? What's the average unit turn? We can try to get it down through regionalizing the unit turn costs. But the average unit turn is what, $1,000 if I had to guess on average across everybody across where it sits. And that's cleaning, painting, patching, carpet cleaning, etc. If we can actually not have that cleaning cost, not have the days in the street, not having to do concessions, because we could keep the building clean, our staff is friendly, they're going to stay, is that there is a true return on where that sits. So be a little more metric driven in your approach and not just say, hey, we are best in class, which means to me, absolutely nothing. There's no component to that.
Yeah, there's not much to it, because you're not trying to stand out from the crowd. You're actually making yourself part of everybody else. You're not trying to build any differentiation between you and the rest. What are some common misconceptions about quantitative selling, and how can a business overcome them?
You got to be able to dive into it. You can say, so you're going to get on a call, right? Adrian Danilla is the regional maintenance manager over Atlanta and Florida, and you're overlooking your teams. And somebody's going to come to you as an industry expert and say, Adrian, I'm going to save your maintenance teams 10 hours a day on where it is. So the common misconception is that, okay, like they're just going to believe me. As an industry professional, you're going to dive into it. I'm going to guess the difference between somebody who is just saying numbers to say numbers and actually being able to dive in. How are you going to save those numbers? If you're going to throw out numbers, you better be able to back into it. Like, what were your case studies? How were you able to create more efficient ticketing times on the maintenance? How are you able to create codes in order to remove fobs or physical keys from the people going to the office, because you now have access codes that can be turned on and off at certain times? What are you actually doing? What are the processes you're putting in to actually save that time? And the tendencies of companies is just to throw out numbers without being able to back into them. I think that we need to stop that as an industry. While I understand, like we talked about earlier, there's a fake it till you make it component to this, is that don't just fake it, understand truly what that is and be able to back that up.
I would like to ask you to share a success story or more success stories from personal experience where this approach has worked for you and produced results.
Yeah, I'll dive in. My last company, a company called TF Living, as I said, in Kimber Creek, of course, I Ventures, for our venture capitalists there, is deploying a lower. We ended up undercutting the market on what was fitness classes, resident events, and things of that nature, right? So when we went in the market, we understood that other competitors were charging a certain rate to the market, but they were always regional, right? Maybe they were charging $80 a fitness class or $100 a fitness class, and maybe we were going in at 60 on average, right? Is that we knew what the market was charging. We knew if we had to pay people more in each market, and we were selling that during our value proposition there, right? So if we entered into New York City and the average cost was $150 a class, we were going in at 100 and telling people we were going to save them 30% because these were the metrics off of these 5 companies that we've done research on.
I'd like to switch gears a little bit next, Devin, and I want to go or stay on a topic that's I'm very passionate about, and that's branding. First question there on branding is, what are some key elements of building a strong brand identity for an early stage company?
Yeah. So first, I gather a following, right? How are you gathering a following? I've worked with multiple brands around how are they posting on LinkedIn? Who are they tagging? What is the content they're putting out? Don't just put out content to put out content. What is your goals of that content? Are you looking to drive customer acquisition costs? Are you looking to drive a reduced hiring cost for people who are reaching out in order to apply rather than going through a recruiter? Understanding what your goals are in your branding and then creating the content, the design based off of where it is, right? For early stage companies, I believe you need to promote your wins. Now, some people will say, I don't want to post that we signed a Willow Bridge community in Orlando, Florida, because my competitors are going to reach out. I guess maybe it's ego on my side. Maybe it's just doing this for a while. I want to promote my wins. If a competitor is going to come after me, my branding and our value proposition are going to be able to overcome that. I'll promote it. I'll tag the company. I want them to share it. I want people to share it, etc. But I think that branding is first and foremost. Develop a social presence, which will lower your customer acquisition costs at scale. And I think that the founders should be extremely vocal on where that is because nobody's going to tell your story better than a founder.
You mentioned storytelling. How important is storytelling in this building a brand, and what role does it play in shaping a brand, early company?
Storytelling is everything. We're all selling. I don't care if you're the front desk person answering a phones. I don't care if you're a leasing agent. I don't care if you're the CEO of the company. We're all selling, and we all tell a certain story. I think one of the key components of storytelling is that it doesn't always cascade down from the top. Is that the story should come from the founder. The story should come from the executive staff. What message are we telling? What is the mission? What is our vision? There should be a certain boilerplate messaging that everybody is talking in their own words around in order to tell the story, right? A good friend of mine started a company called Kobo, right? Not to give a prop to Kobo, I have no involvement in the company, but Kobo was started off of what was going on with Ben Pleat's mom and the lack of interaction within the community. Ben still uses that to this day because it holds true to him. It's not just a story, it means something. If your employees and your customers don't understand why you started the business, it's going to be really hard to just sell. Understand the value. What was the reason you started it, especially as an early stage company?
Next, how can an early stage company leverage limited resources to build and strengthen a brand presence?
Yeah, and look, I mean, if you don't have a lot of resources, ask for help. What are the systems that other companies are using, right? I've invested in multiple companies, and in that portfolio, I typically advise them to use the same resources, right? Whether it's going to be a sales enablement tool through Salesforce, whether it's going to be reply.io, which is a cheaper version to be able to sequence that could integrate with your Gmail, is that understanding how you're building your brand, what your outreach strategy is, will be important because people buy off of people they know. They're going to answer emails based off of understanding who that name is. And the only free thing you can do, right, is post on social media. I'm really big on LinkedIn. I'm really big on making sure companies do that, is be thoughtful in the process. And then we'll use some examples, right? Adrian, you have a massive following on LinkedIn. You post close to every day. Another friend, Mike Wilbur, posts all the time, right? Previous CRO of Rent Dynamics and sold to Entrada. We've watched Chris Moreno post a lot. We've watched Grady Newman from Resi post a lot. These are people that build a personal brand that also helps their companies by being thought leaders in this space.
How important is for businesses to have influencers in their circle, whether they're employees of the company, and this could be like up to a CEO level, or just be advisors, be in their corner, so to say? How important is that piece?
I think it's more important to have them be in the corner. I think that too many companies right now are trying to leverage brand names, right? And we can keep going down. Eric Roseman from Zeal, Joe Summers, an Ash Bell, Karen Mayo, whoever it may be. People are saying, if I have these people on my advisory board, or if I have these people as a fraction of the company, it's going to help expedite it. The thing that people forget is that network only spans so far. So, for example, Adrian, if you go start a company, you say, Devin, I want you to sit on my advisory board, but I need 15 introductions every month. But if two other companies ask me for the same thing, the network ends up getting depleted. What anybody who is experienced in this field, they don't want to just leverage their contacts. There needs to be a true value proposition on where it is that learning how to create a brand or learning how to create your own brand and your company brand is more important than trying to leverage others to just scale the market. I think that I would ask all startup companies that are going to end up listening to this, please don't reach out to ask people to leverage their networks. That is not a good relationship to build.
I'm gonna frame these words, make them a poster. I'll put them behind me right here when I talk to business people. And when I actually talk to companies that are approaching me for consultants. So I couldn't say it better. That's an amazing thing to say. Next, Devin, I want to go in a totally different area. And this is, I know that there's an area that you're very passionate about. So I want to spend some time here. It's the topic of giving back. Why, to you, why is it important for businesses to incorporate social responsibility and philanthropy into their operations?
First off, giving back should just be part of every company. We've all, I don't know of any founder, I don't know of any company that has not had help. And we all need to understand that and really be introspective in that approach of saying, we received help, we should give back, right? We should give back to our community that's buying off of us. Now, giving back can be very broad. Is giving back to a social component of homelessness, right? Entryway does a great job of this. And I think that more people should be involved in that. I think that whether it's going to be your passion for pets, giving back to the pet shelters, and something that's extremely important to me. But we should be giving back not just to our communities, we should be giving back to each other, Adrian. I think that's something that we don't talk about enough. Early stage founders should be reaching out to people who have had success. Jindo from Happy Co. or Karen Mayo started was one of the co-founders of Funnel. Ask them for help. What was their mistakes? Ask them for 30 minutes. And I have not found any founder that will not take 30 minutes with another founder to say, here are the massive mistakes I've made. I think we need to get back as individuals and companies, not just one or the other.
Question here, adjacent question. How can someone that's actually not a founder ask the right question to get in front of a founder and get 30 minutes with a founder?
Be genuine. What is your problem? Can I reach out to you? And I would actually want somebody to say to me in the message, I don't want to sell you anything. I'm having a problem with my sales outreach. Can you just spend 20 minutes with me to go through my process and help me fix it? That would actually make me respond back to somebody. Don't just ask me to reach out and say, hey, I had this great product and this AI is this, and we've shown this. Like I get way too many of those a day. I can't imagine how many operators get on your Bazzuto or Greystar or even regional players, Ross management companies, or whoever it may be. I get too many of them a day. I'm not going to respond back. Be genuine in your approach. Ask for actual help. Don't try to sell me something every time.
Next, I want to touch on impact. What impact does corporate philanthropy have on employee engagement and customer loyalty?
Massive. I don't know. I can't quantify it, right? I just talked about quantifying the sales approach. I have seen enough studies today, and I don't want to quote numbers that I don't truly know, but a lot of us are mission driven. It is not just about the paycheck in today's world. Money's a byproduct of what we do. We want to believe in the service and the company that we're behind. And part of that is being mission driven and giving back, right? We want to show that the profits of the company aren't just going towards the top. It's actually going towards being philanthropic, giving to the employees, giving to the homeless, giving to whoever it may be. And I think people are extremely mission driven throughout their journey as a team member. I don't like to use the word. One of the things that I'm passionate about, don't use the term boss, don't use the term manager, Don't use the term employee. We're all leaders and team members. We can all learn from each other. We all have competencies, and we need to be able to, to me, a true culture would end up putting that throughout their company.
Devin, I want to touch on innovation next. I'm passionate about prop tech. I'm passionate about innovation. I know that your current business is in many sub verticals of real estate. It's not just solely focused, as you said, in multifamily. So, what are some differences in innovation focus between multifamily, homeowners associations, commercial, and other sectors of real estate?
Oh, Adrian, they're so different. That's a great question. I would also say, why has multifamily been such at a fast-paced innovation realm compared to homeowner association? Let's just dive into the easiest component is the sales cycle, right? As a multifamily operator, let's use Nuveen, right? Just as a large scale name. Nuveen owns a lot of units in the market, and they can make one decision that could impact 60,000 units and deploy that. As HOA operators, First Service Residential, Camco, Associate, whoever it may be, is that they got to go to each individual community typically, pitch it to the board, build it into their management fees. It could cause a raise, which could cause attrition. It's just a different sales cycle. And I think that as we go through this, even understanding where it is, right? You're a commercial cleaning company and you're going to go in and try to clean an apartment complex. When you're going to say, here's our technology, right? You're bidding on that apartment complex on per hour of janitorial. Where in the commercial world, you're bidding on per square foot. And building the technology, building the innovation to understand each industry in the sales cycle is going to be extremely important to your growth and your success.
You mentioned the understanding your customer, right? Whom are you catering your services to? One of the things that I've noticed in prop tech in general is that a lot of product that's out there, tech product, is being built by individuals that have never been the end user, right? And I'm not blaming it on people that are the architects, like the ones that are writing code. But I'm saying in that team, part of that team, you should have someone that is or has been end user to provide real time input on how this product is being built. I've seen tech products so many times being built by someone that's trying to guess the end user behavior. And I could tell you that that is not the way to go. Like you could tell that by the adoption rates. And to me, that's the ultimate standard. You have low adoption rates, is not something wrong with the customer, is something wrong with the product. The way it's being built, the way it's being rolled out, there's something, or it could be a combination of all the above. So, in your opinion, how important is that companies that are building tech are having at the table the end user, like actively involved? Not to say that we're requesting, because I'm hearing this argument too. We getting feedback from our customers and we improve the service. Okay, that's an important part. But while you're building it to present it to the customer, where is the customer input right there? So what's the importance of having an end user at the table, in your opinion?
I don't think you can you can't quantify the importance of it. At the end of the day, it's extremely important. If you're going to build a product, know who you're building the product for. Get their feedback. How do you sell to somebody that you actually don't know what their pain points are? How are you developing the technology to say, is this actually helping you throughout your journey? What are you missing? And I think that we need to do that more. It goes back to our conversation earlier, Adrian, is leverage an advisory board. Don't just ask them for referrals. Ask them for what are they seeing in the industry. If you're selling to commercial real estate owners, don't go out to a Karen Whittick Colliers and say, "Hey, Karen, I just want to be able to do a deal with you. What are your issues right now? Do you have any issues in this sector? What are the and really understand it. Surround yourself with people who are actually experiencing the issues, not just say that I lived in a building. I saw this may have been one. Go talk to the property manager, go talk to the leasing agent, go talk to the regional. And then honestly, a lot of people will sit on advisory boards. Give up a tenth of a percent or a quarter of a percent to build it around people and understanding what are they facing day to day rather than just guessing at what they're facing day to day. But I agree with you 100% that people should be asking what to build rather than just building it and then testing it from there.
Next, Devin, I want to touch on trends. What are some emerging trends that you see in the prop tech space? What are some things to look for in 2024 and beyond?
Yeah, so I still think I don't want to say a trend. I think that the space that's still not there yet, and there are people who are still trying to capture it, is the ability to leverage access control in order to reduce headcount, streamline processes. We talked about centralization earlier during our podcast, and centralization of leasing and maintenance, I would say, are the two biggest things. But how are you leveraging access control from whether it's going to be an offline solution that you're able to give guest credentials, whether it's going to be an offline solution on whether you're going to automate the way that some of the integration of the PMS is on where it is, or whether you're going to put property-wide Wi-Fi in and use an online solution. I would say it's not a trend, but the biggest thing that has not been fixed yet is access control throughout real estate in order to create a better resident experience and in order to actually create further efficiencies throughout where it is. Too many people are still using physical keys, in my opinion.
No, I don't disagree at all. I think that's a huge opportunity for operators to embrace keyless access. The hotels have been doing it for decades.
Yes.
And it's an amazing thing. I actually get to use this to check into I check in on my phone. I go straight to my room. If I don't want to stop at the front desk, I don't have to ever. In or out. I go, I check, I get my virtual key. I open the door using my phone. I lock the door behind me. I check out on a phone, and then
That's it.
I would never have to stop at the front desk if I don't want to. How amazing is that? And why multifamily shouldn't embrace that? Like, what's the downside of embracing a system like that?
The downside is the capital expense, right? I don't think anybody's truly worried about the $2 or $3 a unit that somebody may charge, or including your common doors, maybe 4 or 5, but depending upon the company. So I know like Remote Lock does a great job at being able to consolidate where it is and but it's the capital expenditure of buying the locks. I think that we need to create a better way, right? Some of these smart locks are $500 and $600 a lock. And when you deploy that across 200 units or 300 units, we're talking about a substantial amount of money, right? Who has $100,000, $150,000, $200,000, including taxes, shipping, all this other stuff to deploy and then also replace when they go dead compared to a physical key that's $30 that you can go buy from Home Depot? We need to do, once again, access control is a big thing. I think that we're still quantifying the value of where it is. I think that it does provide a massive value from turn of units, from guest access to automation. So this way there's not manual inputting from PMS integrations into the access control system. But too many people are still using physical keys. And I think that we just need to do a better job of quantifying that to show the value.
Yeah, I'd love to see some case studies that are actually showing exactly how property management companies are saving time. How do you calculate that based on the time being saved, right? And the efficiencies that are being created. So I'm definitely
real quick and dive in on that. A good friend, Todd Butler, is the CTO of a company called Central. And the way that they're taking a look at their almost like their Airbnb integration and their short-term stay, and also leveraging their conventional units through integrations, it's amazing about what they're doing, because they're getting a higher per day rental on their access control by saying, you booked online, here's your mobile key, everything's booked there, compared to having to check in at a front desk, give a physical key. They're doing amazing things in the industry, and we're seeing that even from what Airbnb is now doing. We've seen the recent press releases with Greystar and Camden and the other large-scale operators to test it to drive ancillary revenue.
one of the other things that I'm seeing on the operator side, and I've been one up until not long ago, actually last year were for some major corporations. And then when you would log into their tech stack, it's like the Apple Store. You'll find everything you want and you don't actually want or need right there as far as technology. So there's a huge tech stack that has been amassing on especially large operators. Now 2024, we talked about the floating rates and the challenges that are coming with the high rates of interest. And if you can increase the rates, the rents like you used to 2-3 years ago, and then you're gonna have to control your expenses, because there's only two ways you could make the numbers work. And then that's going to affect tech. It's going to affect the tech stack. And how do you see that from a service provider perspective? Because it's not just like, okay, I'm a prop tech for maintenance, for example, and there's 3 others. I'm competing with those. You're competing with everybody else that's a prop tech. And even more than that, you're competing with all the other vendors that are not even prop tech. Everybody's fighting over the same budget. So how do you see that challenge being overcome by the service providers?
Yeah, look, I think that what we're saying is not just overcoming from the service providers, is that one, they need to know in today's market, can they decrease costs to make sure that it's a better cash flow where it's this quantitative selling? What is your value prop? But I would say there's a few issues here, right? I'm watching a lot of large scale operators start to, we talked about centralization of leasing and maintenance. There's also centralization of their tech stack. Are they going to deploy Lively throughout their tech stack, right? Are they going to deploy and then decrease their costs across their portfolio? Are they going to deploy HappyCo throughout their tech stack and decrease the cost and negotiate a lower cost? Because you can't give somebody 1,000 units and expect a volume-based discount. But if you give somebody 50,000 units, you can expect a much lower cost, right? So I would say you're going to see, my opinion, our operators centralizing their tech stack outside of their service providers to be more efficient in where their operational costs are.
Devin, business aside, technology aside, I want to ask you a personal question. It's a very important question that I ask most of my guests.
Okay.
We're only around here for a short period of time. We might think when we're young that time is all we have, like we have unlimited. As we grow older, we realize that it's very limited, right? The older we get, the less is left for us. So I wanted to ask you a question about legacy. How important is legacy for you? And how would you like to be remembered?
Yeah, so I would say for me, I'm less worried about legacy as far as it being passed down. For me, I just want to leave something for the people coming up next, right? Whether like I have a stepson who's 11, I want him to have something there. I don't need my name attached to it, but what I want to be able to do is make a true difference. And I'm less worried. I hope more people think like this. Do people remember my name? I want people to remember what I achieved and how I helped others and where it is. I think that's the biggest thing that we can try to pass down to the new entrepreneurs, the new leaders in what's going on, but really it's just the younger generation, right? Please try to give back. Please have your legacy of what you gave back, not just what you have. I think that it's something that I truly believe in.
I couldn't think of a better way to wrap up this conversation, Devin. But before we do that, I'd like to give the opportunity to share some final thoughts or maybe answer a question you wish I would have asked and I didn't get an opportunity or I didn't think of asking.
No, I would just say, look, as we go through this, and I want to reiterate something. I don't think it's something that you didn't ask. Is for any leader, we're all leaders. We all have competencies. If you need help, reach out to those that you follow on LinkedIn. Reach out to those that you aspire to be to. The most they can say is no. You're going to be turned down. We're all turned down at certain points. We're all going to drop emails that don't get responded back to. We're all going to lose deals. But please reach out. If you need help, if you need advice, reach out to those that you look up to. But Adrian, I really appreciate you having me on. Appreciate the opportunity to speak about the industry, what's going on now. So thank you so much for having me here.
Thank you for being here, Devin. Taking time out of your busy day. It's been a very enlightening conversation for me. There was a lot of uncharted territories, so it was very educational. In a selfish way, I wanted to say that I was able to pick your brain for the most part of the hour, so I'm grateful for that.
Now, appreciate your time, really the amazing questions that you ask. And by the way, thank you for all you do to our industry around being a thought leader and doing podcasts like this.
I appreciate it very much. Everybody, thank you for watching us today. This is Multifamily Chronicles. I'm your host, Adrian Danila, and I hope to see you back here soon. Have an amazing day.